Hi, I'm Jonathan with the Yukon Project. Today, we're going to go deep on high-yield savings accounts. What is a high-yield savings account? A high-yield savings account is really just a savings account which offers a better interest rate than you would normally see from a traditional bank. They're usually offered by an online bank or credit union, and it's because they have lower overhead and they're smaller, which means they have higher incentive to compete for your deposits. But they function the same way as any other savings account. What is an APY on a savings account? Most of us are familiar with the APR, which stands for annual percentage rate. The APR is the annualized cost of borrowing money that includes interest and fees. The APY, or annual percentage yield, is the annualized amount you earn from interest and bonuses associated with an investment, in this case, a savings account. Interest in an APY is calculated daily and compounded. You earn interest on the interest. What are some of the fees associated with high-yield savings accounts? High-yield savings accounts are no different than most other savings accounts, so they may have some fees and they may not have any fees. Some of the fees you might expect are minimum balance fees, overdraft fees, out-of-network ATM fees, and excessive withdrawal fees. Some banks allow you to waive these fees if you meet certain requirements. So it's important to understand what fees exist and what you can do to avoid them. What are the pros or advantages to a high-yield savings account? The biggest advantage to a high-yield savings account is the interest rate. The annual percentage yield, or the interest you earn on the money that you put into the account, can be many times higher than in most other savings accounts. The interest rate can fluctuate, so I can't tell you what a good rate would be at the time you watch this video, though. The biggest influence in the rate is the Federal Reserve rate, which determines how cheaply banks can borrow from the Federal Reserve. The second advantage to a high-yield savings account is that the interest is compounded daily. You may have heard that famous Albert Einstein quote, "Compound interest is the eighth wonder of the world." It's not clear that the theoretical physicist ever really weighed in on financial matters, but it does sound like something a brilliant genius would say, so it's attributed to Einstein. But what does compound interest really mean? It means that you don't just earn interest on the principal that you put in the account, but you earn interest on the interest that you earn from that principal. The next advantage to a high-yield savings account is that your money is still liquid. Being liquid is just a fancy way of saying that you can withdraw your money whenever you need it. There are no terms that require you to keep your money in the account for a specialized amount of time, which is common for CDs or certificates of deposit. If you need to have access to your money with little warning, high-yield savings accounts are a good place to park it. Another important advantage to high-yield savings accounts is that the money is insured by either the FDIC or the NCUA. If a bank is insured by the FDIC or a credit union is insured by the NCUA, this just means that the federal government will guarantee the safety of those deposits. They guarantee the amount of $250,000 on single accounts or $500,000 on joint accounts. This means that even if a bank is small and you've never heard of it, if they are guaranteed by the FDIC, you can trust that your money is safe. The next advantage to high-yield savings accounts is that you can find accounts that have low minimum deposit requirements. That means you might not have to commit to keeping thousands or tens of thousands of dollars in the account. Of course, this is true of most savings accounts, but it isn't the case for other savings options like certificates of deposit or CDs that require a certain amount of money in order to earn their best interest rates. You can easily find a lot of high-yield savings accounts with that kind of flexibility. Finally, the last advantage to high-yield savings accounts is that the fees are similar to other savings accounts. You might be concerned that there are a lot of fees associated with these accounts because the returns are so much higher, but they don't tend to have fees that are any different than a traditional savings account. And just like many savings accounts, the fees can often be avoided by adhering to some simple bank policies. What are the cons or disadvantages to high-yield savings accounts? High-yield savings accounts often put restrictions on the number of times you can withdraw money from the account in a calendar month, or they may also put restrictions on the minimum balance you can have in the account without incurring a fee. These limits may not be a problem for you since high-yield savings accounts are not meant to be places to manage your day-to-day finances, but it does mean that you aren't likely to use them for your day-to-day financing. If you tend to have high balances but dip into those balances often, high-yield savings accounts may restrict you too much. The next thing is that high-yield savings accounts might not provide you the services you want with a savings account. Because most high-yield savings accounts are offered by online or smaller banks, they might not offer the services you are used to getting or the services you want as your financial life grows. Some of these services might include an extensive ATM network, in-branch services like notarizing documents or wealth management, or even a broad range of credit options available to you. And as good as high-yield savings account interest rates might be, it's not guaranteed that you'll keep that interest rate. The interest rates are variable. This means that the rate that you have now can change over time, and it almost certainly will. Most banks reserve the right to change the interest rate at any time, and they probably will as the federal fund rate changes or their need for deposits change. If you want to lock in an interest rate, you would need to go with something like a certificate of deposit or a CD. While getting a much higher interest rate than a traditional savings account is great, the reality is you still won't keep up with inflation. That means that a high-yield savings account is not a good long-term investment strategy. It's great for parking money that you need to have quick access to, but it probably isn't a good place to put your money for the long term. If you have a very small savings that you dip into regularly, it might not be worth the trouble. If you have a large savings that you don't often touch, it might not be a good investment strategy. High-yield savings accounts can also have interest rate tiers. This means that there can be thresholds on the amount of your deposits that earn increasingly better interest rates on your money. Not all high-yield savings accounts have tiers, but if they do, you might find that getting the best interest rate requires you to have more money in the account than you want to put in there. If your high-yield savings account is with a bank that is different than the one where you do your day-to-day banking, you might find that moving the money takes time. It might only take 48 hours or 24 hours, so it might not be a big deal. But if you need access to the money more quickly than that, it could be a minor hassle. And if you need to move money regularly, it could be an annoyance. Here are 4 things you should do before you settle on which high-yield savings account to go with. First, shop around. The best deals are almost certainly not going to be at the biggest banks. The highest APYs are usually offered by online banks because they don't have the expensive overhead of neighborhood branches or extensive operations. Another reason why the smaller banks are likely to offer the best deals is because they need to compete for your deposits. The bigger banks probably have access to more money than they need for their other lending operations. Smaller banks are also not likely to have big marketing budgets, so it's important for you to look around for the best options. At the Yukon Project, we have a way to find the best options today. Second, understand the fees and restrictions. You don't want to be lured in by advertised impressive interest rates only to find out later that the fine print makes the situation much less appealing. Take a look at any fees that they have and what you can do to avoid them. Look at whether they have a minimum deposit requirement that you might have trouble meeting. See if they have a tiered system to their interest that might mean that you won't have access to their best rate. A little research now can prevent you from having a lot of annoyance later. Third, figure out how easy it will be to move your money during the month. If you are going to need access to the money quickly for emergencies or small business expenses, you want to be able to get at the money quickly. Some high-yield savings accounts also have restrictions on how many withdrawals you can make in a calendar month. Make sure that the account is going to work for your needs. Finally, determine how long you plan to have the money in the account. If you think you won't have the money in the account for very long, you have to determine whether the interest you earn is worth the inconvenience that it might cause you. On the flip side, if you think the money is going to be in there a long time, you may decide that other long-term investment opportunities would be a more lucrative place to put your money. When is it a good idea to use a high-yield savings account? There are several situations where using a high-yield savings account is a smart financial decision. First, a high-yield savings account is a good idea if you have cash sitting around that you need to have access to. If there's a high chance that you will need to use some of that money suddenly, like a rainy day fund, a high-yield savings account might be a good way to earn a little extra interest as it sits there. Second, if you have money that doesn't regularly move in and out of your budget, having that money earn extra interest is better than it sitting in a low-yield savings account gathering dust. Third, if you have savings that you want to keep separate from your other money so that you aren't tempted to spend it, emergency funds, saving for a big purchase, and safety funds are good pockets of savings that you can move into an account that is out of sight but still earning much better interest. Fourth, high-yield savings accounts are a good way station between short-term and long-term savings. If you save money little by little and then move bigger lump sums into longer-term investments, it might as well be earning a little extra money rather than sitting in a low-yield savings account. What should you look for when you are shopping around for a high-yield savings account? One of the things you want to look for are bonuses. Banks offer bonuses for the transfer of certain amounts. Those one-time bonuses may actually push up the APY for your first year significantly. Keep an eye for the fine print though. Sometimes you only qualify for the bonus if the deposit remains in the account for a certain amount of time, say 90 days. Another bonus banks often offer is an incentive to set up direct deposit. Remember, these banks are offering a high APY because they want your deposits. So it's not surprising that they want your paycheck to flow into your account in their bank. Next, keep an eye on minimum balance restrictions. If you dip below these limits, what happens? Do you get hit with fees or do you just miss out on earning interest? A related issue is whether the account has balance tiers that earn different levels of interest. The bank will publish a rate card if they have an interest tiers to their account. You will want to make sure that you understand them so you don't think you will earn more interest than you really will. Next, consider any other rewards the account might offer. Some banks are starting to offer benefits you might associate with credit cards like Sky Miles. You might want to weigh these benefits against the other options and how beneficial they will really be to you. Also, watch out for any restrictions that the account might impose on the number of times you can withdraw money in a month. You don't want to end up paying fees on excessive withdrawals that eat into whatever interest you earn. Finally, consider the services that are most important to you. Do you need access to a large free ATM network? Do you want a mobile app that will make accessing the account easier? Think about how you are actually going to interact with the account on a regular basis and what you will need to make it as convenient as possible. If you are looking for a high-yield savings account, the Yukon Project has a list of some of the best ones out there. Check it out. And if you are interested in more information about other personal finance-related issues, the Yukon Project has a lot of great information to help you navigate the financial wilderness. I'll put a link to their website below. Thanks for watching, and please like this video and subscribe to our channel.